All right, friends, welcome back to the show. Last time I did a portfolio show was this, the ultimate crypto portfolio, about 2-3 weeks ago. And at that time, there was a lot of comments and a lot of you reached out and you were saying that you wanted to have a more narrative-focused portfolio in different shows. So starting that more narrative-focused portfolio shows, I'm going to start with RWAs today, and I'm going to give you not only my portfolio, but rather my thinking why RWAs are something that is worth focusing on. Now, today we had a crazy light bulb moment. I had a crazy light bulb moment. We were in a morning call with the researchers at Banter, and we're discussing about NFTs and how the future will look like when everything will be tokenized and on-chain. And so I just want to share with you my thoughts, why they are worth looking at. Obviously going to share with you the data, and of course I'm going to give you a portfolio. I'm going to link it down in the description at the end of the show, so you will be able to get it. There will be an Excel sheet and you will be able to use it to your own benefit. But rather just going through the tokens and explaining why I take all the tokens, which you can also just simply read. I collected everything in an Excel sheet for you. I would rather give you like the vision to RWAs. So let's jump into it. Also, guys, do not forget to subscribe and like the channel. Subscribe to the channel and like the show. If you don't know who I am, my name is Fefe. I bring you the best alpha over at Crypto Banter Plus every single day. From the past 24 hours to the next 24 hours, trades and much more. You can find me at 𝗙𝗙𝗙𝗙𝗙, as you see here, but there's a link in the description. Wait until the end of the show and then just decide if you like this. And if you do, subscribe, like, follow, all that. Let's jump into it. So number one, what are RWAs? Okay, so RWAs stands for real world assets. These are tangible assets that exist outside of the digital realm. Now, it's very important to understand what these things are, because a lot of people I see on X, they're like, what are RWAs? Is a house an RWA? So let's separate the two. One is these are tangible assets that exist outside of the digital realm. That means that anything, this could be a real world asset. This is like these magnetic balls, or it can be my earpods, or it can be my phone. Anything that is in the real world is a real world asset. So why do we call real world assets when we talk about tokens? Because this is just a general term when we talk about tokenizing real world assets. So how would this actually look like? So there are a bunch of real world assets that you can tokenize, not only on earpods and the magnetic balls, but much more important assets. For example, currencies. You can look at stablecoins, USDT or US dollar, and then their stablecoins, USDC, USDT, which we use every single day. That is a real world asset because there are dollars in the real world and you are able to access one-on-one that dollar on the digital space. But there are commodities, for example, gold, oil, wheat, all that. There are stocks, for example, the Tesla stock. There are carbon credit, real estate, bonds, art, and many, many, many more stuff. Now, the whole idea behind real world assets, and again, when I say real world assets, I rather mean in terms of blockchain and crypto. So real world assets are the tokenization of a real world asset. So for example, you can put a house on the blockchain, and by holding the token or the NFT of that house, you own parts of that asset or the entire asset. So you can prove ownership, you can transfer ownership through the blockchain, but it goes much more deeper, and especially with the future use cases I'm going to show. But just so you probably heard about World Liberty Finance, this whole project from Trump, or related to Trump, is not the one sitting there running it, but it is related to Trump, and we will definitely see some waves happening with World Liberty Finance as Trump comes into office. But this could also be a real world asset platform. Imagine the fact that Trump comes in office and he says, I have a real estate empire with, I don't know, thousands of buildings, right? Or hundreds of buildings. He has to find a buyer to sell these buildings, or he has to create a legal infrastructure, and then only Americans can purchase in as a shareholder of a company that goes. So it's like a complete, it's a very difficult process to give a share of ownership of his real estate empire. But what he can do, and probably where this is heading as well, to be honest, in my personal opinion, is that he can create a chain and he can put his entire real estate empire with its earnings on the blockchain and allow you to own a portion of that. How would that work? So for example, he can say, let's say I have 100 units, right? 100 buildings. 100 buildings generating $100 a month, right? So one building generates $1. That means that if he creates, let's say 100 tokens or 1,000 tokens or 10,000 tokens and allows you to buy a share of his real estate empire. If you buy, let's say it's 100 token, if you buy 1 token, that means you basically own one whole building. But if it's 10,000 tokens, you can own 0.01% of his buildings and enjoy 0.01% of the revenue that comes from it. So that's how you can basically imagine it. But it's not only Trump where we see the movement happening, also massive players like BlackRock, as this article says here from Forbes, saying leading asset manager company BlackRock has made major investments in real world assets after Bitcoin ETF launch earlier this year. Now managing 21 billion, by the way, shout out, it's crazy. 21 billion in Bitcoin volume is crazy. The rise to variety of assets, including bonds, stocks, real estate, and cultural assets will be tokenized through RWA products. Again, real world asset, we're still talking about blockchain, right? So all what RWA products, meaning real world assets put on the blockchain. This innovation aims to democratize historically less accessible investment opportunities by promising increased liquidity, proof of ownership, and transparency. We're going to talk about the advantages in a second. But the basic idea, what you have to understand, when we talk about RWAs, we are talking about real world assets, real estate, gold, whatever, a bond, a fiat currency, a dollar, euro, whatever. And we put a one-on-one replica of that on chain for better liquidity, for transparency, for ownership, for easier transfer, like a lot of other reasons which we're going to get into. But that's the basic idea. You have in earpods, you can put that on the blockchain, and when you sell these earpods, you can just simply transfer the earpods NFT or the earpods token out of your wallet. That's one. Or again, as an example, you can own a house or a real estate, and you can fractionalize that by simply creating tokens and allowing people to buy tokens of that real estate and own a portion of it. Now, there is a bunch of data. Why are we talking about it now? Because there's a bunch of data that shows that RWAs are picking up. It's not only Trump, it's not only BlackRock, but the actual market and data, on-chain data is showing us that it is happening. For example, the tokenization value and number of products tokenized since 2020 sees simply skyrocketing. So it's going from basically nothing down here at 7 billion to almost 10x or over 10x, 12x to 94 billion here in October. If you see number of projects related to tokenization by category, so you see government securities, you see fiat collateralized stablecoins, for example, USDC, USDT. You see commodities. I talked about gold, for example, silver. You see real estate, as we talked about, simple real estate, asset-based finance, equities, and much more. But you see that this is already happening, especially at securities and fiat currencies, but also commodities and real estate is coming up and coming. Number of users that are currently holding or previously held tokenized assets also skyrocketing up at 411,000 users, about 66 million total from 2019, down from like 300,000. So it's nothing. The past 5 years has been exponential growth. So this is one data. The second data is that there is $156 billion in real world assets as the sector. Now, this might be a shocking number, but if you really think about it, $156 billion is not that much, especially if you look at the potential here between 4 trillion and 30 trillion by 2030, which is the next 5-6 years. So there is still a massive potential here, looking at the fact that 156 billion is the total market cap of the sector of RWAs as a whole. That means including every RWA project's market cap. And the potential is 4 trillion to 30 trillion by 2030. Absolutely insane. Now, that's not even a surprise that a lot of people are calling for the RWA cycle in 2025. As you can 2023, 30 billion, 2024, 60 billion, 2025, 1 trillion. Now, I don't know if it's possible. I don't know if it's going to go to a trillion now, but whether it's going to go to 4 trillion in 6 years, I definitely can imagine. And no wonder that a lot of people talk about it. For example, Alex Becker as well recently, just talking more and more RWAs. For example, here saying RWAs are super underrated, but also asking for RWA tokens. And I would not be surprised if that was an RWA show coming for him as well. The question is, what is the use case here? What use cases we already have? So everything comes back to adoption when it's crypto. And that was today's discussion, which was if we look at any crypto price, is crypto a Ponzi? Let's not go to that discussion now. If crypto is a Ponzi or not, and all the projects out there, do we need this many layer 1s? Do we need this many layer 2s? But the fact is that it will all come back to adoption. Are there people willing to use the protocol or the narrative that you are looking at? So what I want to show you, there are a bunch of use cases. This is one of the main reasons why I really like RWAs, because there are a bunch of use cases that already use RWAs and tokenized assets. And then a little bit later, I'm going to talk about the challenges. I'm going to talk about the advantages, but I'm also going to show you a bunch of stuff from the future, what is really possible and where we're really heading. And it's scary. It's scary good in my opinion. Real estate, one of the number ones, real estate. So we talked about it. There are a bunch of projects out there as well. A lot of reasons. Imagine that you own, again, you're Trump, you have a real estate empire, you want to tokenize that, you want to give people the opportunity to invest fractionlessly and earn yields from a real world rental entity. That's one of the use cases. But the second is that now through real world assets, you're able to invest in a real estate market that is far away from you. So I could just simply log in, connect my wallet USDC and invest in real estate markets in Florida, or I can invest in Norway, or I can invest in Australia with a click of a button without actually having to go there. Why? Because everything is tokenized. There are a lot of projects that are tokenizing real estate, and then I can buy it and actually hold and own a fraction of it, which is very, very cool. Fine art and collectibles. Now, obviously, I talked about NFTs. If you haven't seen my NFT shows, go and check them out. I think they're pretty cool. I'm very, very bullish on certain NFTs. I'm not bullish on NFTs as a whole. I'm bullish on certain NFTs with proper either utility or story and history behind them. But if you look at fine art and collectibles, it's basically a no-brainer as well. Why? Because you can simply tokenize. Let's say there's an asset that's worth $100 million, $50 million, $200 million. If there's an asset, not even that, if it's worth $100,000, $200,000, and for example, a crowdfunding campaign could be that a government wants to purchase back an art that is in another country. It doesn't want to finance itself. What does it do? It puts the art as a tokenized piece of art and gives its citizens the opportunity to purchase a fraction of that art. That art goes into a museum, and every ticket sale, a fraction of the ticket sale goes into the holders of these assets. And this is going to happen. This is one of the things that I'm going to talk about in the future, but it's already happening. So you already are seeing a lot of arts being tokenized, being put on the blockchain. And if you just look back, it doesn't even need to be real world assets per se, but you see how NFTs gained extreme value from my last video. 70 million, what is it? 1.7 million, $700,000, a lot of money for a JPEG. Here you have paintings and real world assets. For example, popular artwork like Da Vinci's work and whatever could go up to 450 million. I actually thought it was like 200 million, but anyway, 450 million. So you could actually fractionalize that. Second is commodities. Very simple, gold, right? So you want to all own gold. Gold is heavy, difficult to transport, whatever. A lot of times you can't even transport above a certain amount. What do? You have it tokenized in your wallet. You can have tons of gold in your wallet through tokenization. And if you trust the custodian, you can simply hold the gold tokens in your wallet. A fraction, you can hold a fraction of an ounce of gold in your wallet and know that that fraction and that piece of fraction of an ounce is somewhere stored safely. Trade finance. So if you look at global, so for example, you can look at invoicing, you can look at supply chain. I'm going to talk about it in a second. But supply chain, for example, is a big one where you have to track, for example, containers, right? So when you have to track containers, you will need to know where the containers are, where they got imported, offloaded, unloaded, whatever. This could be a fantastic opportunity to actually create a token or an NFT for each container and track it on chain as they get offloaded and unloaded. Carbon credits, very big business, and it's already happening, already being tokenized. And as it says here, the world is moving towards a greener approach with increased participation lately. So there are the carbon credits that are already, for a lot of companies, obligation to actually to comply with these regulations, especially in the European Union. So companies will need to purchase carbon credits. Government needs to purchase carbon credits. It is the difficult industry to do. It's difficult to buy. It's difficult to sell. But if it was tokenized, would be much, or it is tokenized, much, much easier. Intellectual property and infrastructure projects. I want to talk two more. Intellectual property, which is an IP. You create a software, you create a song, you create a movie, a picture, whatever that is. Who took it first? Who did it first? The first one who tokenized it, right? So if you're able to put it on the blockchain, Again, I'm talking long-term thinking here, but if I put something on the blockchain and every IP right will be recorded on the blockchain, it's a no-brainer at some point because we'll not have to be cross-border checking and who patented it first and this and that. You can have on the blockchain patents and those patents can be valid if the infrastructure is there, and we're going to get to that in a second. And then infrastructure projects, which is super interesting, where a lot of countries, for example, do not have great roads, right? Why? Because the government doesn't spend enough on the tax money, or they steal it, or whatever that is, but they don't have it. So what can happen is that instead of private companies coming in and financing a road, then becomes like, for example, a highway, then that becomes a paid road. Now what you can do is you can tokenize that road and be like, this road is worth 1,000 tokens, and the projection is that there will be 40,000 cars going through every single day on this road, and by tokenizing the road, they will pay a certain amount of fee, and you will get yield by holding this token that represents a fraction of a road. So that's just one example where this public works could be very, very cool when it comes to tokenization. And the best part is it could be all automated. Why? And this is the time to talk about the benefits of tokenization. Now, there are a bunch of things that you can talk about when it comes to benefits, but a few of the main benefits are listed here. One of them is increased liquidity. So I'm gonna go back to the example of a house. When you have a house or an office building, or an office building with 20 offices in it, it's very difficult to liquidate that. Why? Because you need to find one buyer that buys the entire building, takes the risk, whatever, and then you facilitate the transactions. But if you can create a tokenization for that office building, and you can choose 20,000 people to buy one token and therefore pay a fraction of what they would have to pay for the whole one, you immediately made the office building very, very liquid. So you made an illiquid thing, which is the office building real estate, a very, very liquid asset through putting it on, tokenizing it on the blockchain and fractionalizing it. And that's the other thing, which is fractional ownership and asset fractionalization, which basically means that now you had to find one buyer of a real estate office or anything for that matter, anything that you have a big yacht, for example, that you want to sell. You have, again, a roadwork that we talked about. Now, it doesn't have to be one buyer and one seller. There can be one seller and there can be thousands or tens or hundreds of thousands of buyers all at once. Again, going back to the example of a government, you can simply have the citizens of a country purchase a portion of a road or an infrastructure. The same way here, you can have tens of thousands of people purchasing a portion of a real estate empire like Trump. So that comes with fractionalized ownership and asset fractionalization. So you divide the asset into smaller pieces, and therefore those smaller pieces are owned by more people other than one. Transparency, everything is on the blockchain. So if you're running on the blockchain, you can see everything what happens. It's especially good when we talk about supply chain. You talk about fair trade products. You talk about, purchasing and donating, for example, for a good cause. And you don't know where that money goes to. But if you would tokenize these, for example, you would do this with USDC and everything would be tokenized in that aspect as a real world asset, you would be able to see exactly where your money is going to from your wallet. Accessibility, again, is very easy. It's a MetaMask wallet. You don't, or whatever wallet you use, but it's like, for example, an EVM wallet or Phantom wallet or whatever. You can access the chain very fast, very easy, very, very simply. Smart contracts, as I said, for executing these trades. So, for example, in a supply chain, when we talk about containers being tracked, every time a container is checked, or a product, for example, you're ordering a product. Every time a product goes through a certain step, they check the product in, that gets recorded on the blockchain and cannot be modified. So it's not a question where your product is. Smart contracts will be able to allow this. There is no human interaction needed. There is a code where you say this product goes to Fefe, and every time it gets checked into different borders, different post offices, whatever that is, put that information on the blockchain and just simply send the notification. That all gets executed on the smart contract, and once your package arrives, it gets paid. So there are a bunch of opportunities there. But also there's reduced cost because of all this, as we discussed, the cost of tokenization or the cost of the asset management after tokenization reduces massively. Diversification is much easier to buy. I'm going to buy a fraction of a real estate in New York. I'm going to buy a fraction in Norway. I'm going to buy a little bit here and there. So tokenization will enable diversification and then regulatory compliance. Now, obviously, it's very difficult, and I'm going to talk about the challenges in a second. But regulatory compliance basically means that you can have clear, especially when it comes to smart contracts, you will be able to have clear smart contracts and clear procedures in place that doesn't require that much human interaction. So when you have tokenized assets, when I transfer, for example, I have a car and that car is an NFT in my wallet and I just want to sell that car, I don't have to sign a paper and him sign it and have 3 copies and go into the office and then they approve. It takes a week. Then there is like 5 people working on that at the same time. The system updates. Then I have to go register for license plate. All of this can be done in one single transfer. Once, obviously I'm talking about the future here, but there is a possibility of this happening with one single transfer. Why? Because if I have a car and I transfer that car to your wallet, that transfer, if it's, for example, on a government chain, gets recorded and immediately a smart contract gets triggered. What does the smart contract do? 1, it notifies the authorities and modifies it in their system. 2, it registers you for a new license plate or whatever you need. 3, it immediately moves for example, or notifies the authorities about insurance and notifies you that you need an insurance for this asset that you just acquired in your wallet. So there are a bunch of things that can be executed, and especially when, for example, you're buying a car, you're taking a loan, you can do all that through a smart contract as well, because you can just put in your cash into a smart contract, they put in their asset. Once the two meet, the exchange is being executed, and it's basically done. So I don't know if this makes a lot of sense for you guys, but I hope it does, because I'm super passionate about RWAs now that I understand, and I just want to give you a much better understanding on what RWAs might be. And I'm going to talk about the future as well in a second, but I want to give a big shout out to our sponsors, Red Bull Network here. They are a licensed, very fast, very cheap, very convenient, and most importantly, absolutely professional team when it comes to RWAs and when it comes to tokenization of assets. They are a professional team as well, but what I said in the beginning, it's very important, especially when it comes to RWAs, is that you need to have adoption. Now, these guys tokenized $73 billion worth of assets already. They work with the biggest guys, Carbonhood, Hotly, Firebricks. Carbonhood, by the way, manages $2 trillion worth of carbon credits, and they are tokenizing carbon credits from them or through them. So what do they do exactly, and why you should look at them? 1, they are enabling asset issuers to tokenize and trade compliant on-chain structured products. Now, this sounds a little bit complicated, but what it really means is that Trump can go to these guys and say, hey, I have a real estate empire and I want it to be tokenized simply, securely, on a chain that is extremely fast. They can handle 15,000 transactions per second. And I want it to be licensed. I want it to be through a regulated infrastructure, a regulated company. And it's important that you have to understand these big guns, whether we're talking about smaller or large enterprises like BlackRock, they can't do this on their own. So they'll go to someone, and that someone will tokenize it for them. And this is exactly what Red Belly does. You go down here, if you go into their website, there's a link in the description. Check them out. It will tell you exactly asset issues, what the problem here, what the solution is, targeting market size, city different predictions here, 30 trillion, 5 to 10% of all assets by 2030, 16 trillion, so about 14.6 trillion industry, as we have discussed. And as a scroll lower as well, I think they could be a major player is this. What is compliant asset tokenization? Pay attention to the word compliant. But only Red Belly offers asset issuers a fully compliant network for asset tokenization by providing finality, which means it's instant finality. It's instant transfers and finality on the blockchain. Accountability, meaning, KYC, and it's not just some random lending and borrowing DeFi protocol. Robust security, compliance, as we have discussed, and through output, which is again going back to the fastness of the chain, how fast they can facilitate transactions. And again, very impressive partners, obviously all the other ones, but Carbonhood manages $2 trillion worth of carbon credits. Fireblocks, one of the largest custodian in the place, in the space. Liquidize manages $500 million in equities. And Hotly, which facilitates about $12 billion worth of rent rolls and payments every single year. So it's actually quite massive. They have a token that just launched. They just announced it on their X profile, link in the description as well. Mainnet is live, token is live, it is available on Maxi. You can go, there will be a link in the description to everything I say. I'm gonna tell you one thing, the fact that they are licensed, the fact that they are working with the best in the industry, I genuinely, personally believe that they can be leaders when it comes to space. And I know that they are partners on the channel, but we had a lot of partners that pulled a 20-30x. I am gonna put my money where my mouth is. I am going to purchase a small moon bag of the project. I do believe that at a 258 million market cap and 2.5 billion FDV. They have a potential of pulling a 4 to 5 to 6x, depending on how the RWA narrative unfolds. But looking at the fact that they are licensed, looking at the fact who they're working with, I think they are great bet. There is a link in the description. Make sure to check them out. Now let's jump into the challenges. And also it's actually quite interesting because great RWA projects actually solve the issues that we're going to talk about. So Red Bull is also good from that extent. But let's look at the challenges. Verification. One of the biggest challenges that I see, which is not really a problem, but it comes up a lot of times, is verification of the assets. So it's fine that I put my car on the blockchain and I facilitate transactions on the blockchain, but who approves that transaction? What happens if my wallet gets hacked? And then my card that's in my wallet is now belongs to someone because someone hacked my wallet. So there's like a lot of uncertainties that are happening. And I personally believe when someone says to me that RWA is not going to be working because decentralization will not allow the censorship that it requires, all I can say is I do believe it will happen, because I do believe that it's not going to be a decentralized system. I don't think that RWAs are going to happen on a mass scale in a decentralized manner. I do think it will be a centralized chain or centralized chains, whether it's for governments, companies, corporations, whatever that might be. But I do think that verification will be solved by the centralized entity, but for a fraction of the cost, for 10 times the speed, and much more reliably and much more securely. So forgetting all the customer supers and paperwork and whatever that we have, it's not going to be a problem. Then the second biggest issue that I actually do see now with Trump coming into office and more regulation is coming and regulated framework is coming, not that much concern, but so far most of these protocols, RWA protocols and projects, are reliant on a stablecoin. Currently USDC. Now we have seen, if you've been here quite enough or quite long, you know exactly that everything gets questioned in the bear market, right? And we had USDT FUD for a long time. Happily, we did not have that much USDC FUD yet, but we don't know what's going to happen. So the fact that you have to use your RWA assets or protocols relying on an RWA product, which is a fiat-backed currency, and you have to trust that company that they do have the backing for the US dollar, for the fiat currency that they promise, that is a massive, massive risk in my honest opinion. Now, obviously, if there is no bad things, if things don't go bust, we've seen what happened with FTX, for example, but if things don't go bust, I do think that this can be neglected, especially if there will be more stable coins and fiat-backed stable coins coming into circulation, and then you can rely on more and more. I do think that will be solved. But the third thing is, or not but just saying, the third thing is regulations. Now, this is also something that I'm super excited about because Trump will lead the way. He will be the first, to really step up, really bring, hopefully, we don't know, but hopefully bring regulation to the states, and therefore everybody is looking at the states. So if there is regulation in the states, that will reflect or have a ripple effect on the rest of the world, which I do believe will be a massive catalyst for not only crypto in general, but RWAs as well. So regulation is obviously an issue because you have to understand, you have to oversee this whole thing. And if you want to automate everything, especially I talked about the example with the car in your wallet, that requires not only a car put on the blockchain, but that requires the car dealership to adopt that system. That requires the government office to adopt that system. That requires the insurance company to adopt that system. So it's a very, very, very long drive, very long time. But once we get that right, once the framework gets established, once regulation gets put in place, this thing can exponentially grow and get every asset can get tokenized. So this is what I've been thinking about. This is what my thoughts were about RWAs. I just put everything out for you guys. So I hope this makes a little bit more sense. I hope that you understand where I'm coming from. And I promised you my portfolio, which I'm gonna show you now. This is my portfolio. I'm not gonna go through. So here is what we did with the portfolio. One is I analyzed all the portfolios of different people. So we have Miles here, Alex Becker, Ranuna, the man, Pete, Joe Paris, Altcoin Daily, Crypto Bullet, Marina Fall. So all these portfolios we analyzed and we put them in here and we basically marked them as yes or no. Do they have these tokens in their portfolios? If they do, we added a yes here and you will see a score. So obviously higher the score, more people had it in their portfolios, and more people have it in their portfolios, more people talking about it, more people believe in it. So that's why we added the score. And then you will be able to just simply go on file and create a copy of this for yourself, and then you can decide what tokens you want to allocate. There will be a link to my X profile down in the description. So you can go here and it will be a pinned post, or actually maybe if you click on it, the post will take you to this portfolio. Let me know what you thought of this show. Let me know if this gave you any value. Let me know if you understand RWAs a little bit better, and let me understand if you're looking into the future and you believe that this is going to be something that we're going to look back at this video 20 years from now, 15 years from now, and be like, oh my God, that dude get it right. Anyway, thank you so much for watching. Do not forget to subscribe before leaving. Like the video if you liked it. Again, leave a comment. Let me know your thoughts. I'm going to read all the comments. Follow me on X. Check out the portfolio. It's actually very, very valuable. There's a link in the description. And if you're there, you know what to do. Just smash the follow button as well. Guys, truly appreciate you. Make sure to check these 2 videos out. Subscribe by clicking here. Come back for the next one. I am over at Banter Plus every single day bringing you the daily alpha. Other than that, have an incredible, incredible day.